expect 35% pullbacks frequently in Bitcoin. And that means more in alts. Understand that, and you'll understand the opportunity set.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Raoul dives into the world of crypto and Bitcoin. They'll break down market trends, big opportunities, and where the future is heading. Let's watch and catch his insights together.
Rising to meet it. This is how you service the massive debts. You pay the interest. You do it via currency debasement. That's what liquidity is. It's a fancy word for currency debasement. And total liquidity is the way that they've been doing it. Now, this is not new. This was all done after World War II, when at the same time the world was massively in debt. We had lost a large part of the working population via war. And we then had to erode the debt via financial repression. Financial repression is when you keep yields lower than growth or lower than inflation, but generally lower than growth, nominal growth. And what happens is that over time, GDP rises, but debt doesn't rise as fast as GDP, and you erode away the debt. And that's via debasement. So that was very common in the 1950s. That lasted about 2 decades. We're about, where are we now? 2008. We're almost 2 decades into this episode. And interestingly enough, the S&P now very much follows the S&P in the 1950s. And what we had then was the everything code as well. We had this perfect 4-year cyclicality that plays out very similar to the cyclicality now. That cyclicality is the debt refinancing cycle. So in this stupidly colorful chart that nobody can read, and if you're colorblind, you're totally fucked. But imagine you could see it. You can see all of these colors, and basically each color is a year. And in liquidity terms, these are broken into seasons. So we're currently coming into the fall season, or autumn if you're not an American, because fall sounds stupid, because what leaves fall or something, I don't know. But anyway, the autumnal season, and it's a nice autumnal color on the chart if you're not colorblind, is when you tend to see the main debts roll. So we've got about 9 or 10 trillion of debts to roll this year, and you need a large increase in liquidity. The last cycle, 2020, most of the liquidity actually came earlier because of COVID. But generally speaking, the liquidity cycle is this year. So we're expecting an expansion of liquidity.
Peter Schiff and Michael Saylor rarely see eye to eye on Bitcoin, but a recent moment brought them surprisingly close. After Saylor tweeted that 1 Bitcoin equals 1 Bitcoin following the latest market crash, Schiff couldn't resist a sarcastic jab, agreeing correct, and that's all it equals. Schiff, who has always argued that Bitcoin has no real value, took the chance to remind everyone of his long-held belief that gold, not Bitcoin, is the true store of value. During the recent sell-off, Schiff doubled down, saying Bitcoin behaves like the riskiest asset, completely dependent on market emotions like greed and fear. Meanwhile, he praised gold's real-world uses, pointing out the irony that gold is even used in Bitcoin mining equipment. Despite their constant back and forth over the years, Saylor has yet to accept Schiff's challenge for a public debate. With markets still shaky, Schiff predicted that Saylor's firm, Strategy, might be heading for serious trouble.
This is Bitcoin, and then its 14-day RSI. And what I had been saying at MIT from really, I don't know, when did this trigger? What was that? Last month? 2 months ago? No, a month ago, when we fell below 30, is that it's not unusual, if you look back at the previous 3 times Bitcoin triggered an oversold reading, to base. And this base can take time. And you know, in both the 2022 instance and the 2023 instance and the 2024 instance, we made lower lows. And if we look at intraday pricing overnight, we made a slight lower low versus the lower low which occurred, the low which occurred last month. But again, I believe we're in the process of this basing. So the kind of this accumulation phase. And then if we look at the last 3 times, so that would be the teal line, so the average price trajectory following the last 3 Bitcoin RSI oversold readings. And again, oversold means below 30. This is the current trajectory versus the future trajectory. So what you can see is I'm looking back 2 months and then forward 4 months. If we just look at when things start to pick up, it's really a month and a half after the original oversold reading is triggered. So these bases take time. And so
and then the
that we're
next
seeing
phase is very strong.
That's right. And so what's been frustrating over this phase is the chop. And I can see all over Twitter, and we've talked about this before. People are like, "Oh, well, Bitcoin's down another 2%." No, or it's down another whatever. It's not. It's just been doing this, and so it's been going up whatever 10%, then down 10%. But we made a new low intraday last night, which we've already recovered. But the point
it's normal for alts, and it's normal for alts to bleed in that environment generally because there's more issuance of alts, and generally as people pull in from the risk curve, alts come lower, but they come back faster, which is that alt season chart we talked about before. I know nobody believes in it now. There's too many altcoins. It's all fucked. It's only Bitcoin dominance forever. It will most likely, probabilistically speaking, play out like it's always played out, which is as the ISM rallies through 50, this recovers. What happens is alts outperform.
That's right. And the only other thing I'm just going to say on the business cycle, and then we can get to technicals, is really with break evens now falling and the dollar lower and rates lower, plus city economic surprises. If we talk about the U.S. basing and moving higher,
XRP's price took another hit on April 7, dropping to $1.94 as the entire crypto market faced a sell-off. The ongoing U.S.-led tariff war, now dragging into its 3rd day, is creating a wave of fear across global markets. Nearly $60 million worth of XRP futures positions were liquidated in just 24 hours, showing just how cautious traders have become. Analysts say the lack of excitement in XRP's derivatives market is putting even more pressure on the price. This latest drop isn't happening in a vacuum. As President Donald Trump announced steep new tariffs against major U.S. trading partners like China and the EU, fears of a global trade war erupted. XRP, like many risk-on assets, tends to get hit hard when investors pull back from risky markets. With concerns rising that reduced international trade could hurt XRP's real-world use case, sellers have been quick to act. Adding to the bearish mood, open interest in XRP has fallen sharply to $2.87 billion, down 63% from January's peak. A shrinking open interest means less money is flowing into XRP's market, making it even harder for the price to recover. Negative funding rates across XRP perpetual futures markets are making the situation worse, showing that traders are leaning heavily bearish. The scene looks very similar to what happened between February 2 and February 4, when a massive $112 million liquidation event triggered a 40% price crash. With traders now betting against XRP and capital exiting fast, a quick rebound seems unlikely unless sentiment shifts dramatically. For now, XRP looks stuck in a tough spot. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.